So there's one chart signal that every single person involved in the market should understand, and I mean everyone. It doesn't matter if you trade futures, crypto, forex, or if you're a long-term investor just buying stocks. If you understand what an exhaustion signal looks like, you'll start recognizing when a move is running out of energy. And that can help you time a scalp, catch a reversal, or even decide when it actually makes sense to add to a long-term investment. Because let's be honest, would you rather add to a position randomly on a fixed time schedule, or when the chart is clearly showing you the move is running out of steam? So today I'm going to show you exactly what exhaustion looks like, and how I identify it in real time. Most traders try to predict reversals. They see the market dropping and immediately start thinking, maybe this is the bottom. But trying to guess bottoms is one of the fastest ways to lose money in trading. Instead of predicting, you want to wait for exhaustion, because exhaustion is when the market actually shows you that the move is running out of steam. So let's look at a real example. In this case, I'm replaying the chart so you can watch the exhaustion candle form in real time. You'll notice the move down becomes very fast and emotional. The candles get larger and momentum increases. This is usually the point where the inexperienced traders panic and start selling at the worst possible moment. But experienced traders are watching for something different. They're watching for that exhaustion candle. Now, typically this candle will show you aggressive selling into the low, a strong rejection, and a wick back that shows buyers are stepping in. Now, what that tells you is that sellers pushed the market hard, but buyers were waiting to absorb that move. Now, once that exhaustion candle closes, the key signal I watch for is the break of the high of that candle. When that level breaks, you often see a very aggressive snapback. And in this example, price immediately spikes right up towards VWAP, which is a very common mean reversion target. That move alone can create a very clean day trade. Now, something important to understand here is that this concept doesn't only apply to mean reversion traders like me. It actually applies to any strategy that you trade. It doesn't matter if you're a breakout trader, a trend trader, a scalper, or someone who invests longer term. Because even if your strategy has nothing to do with mean reversion, you still want to understand what the exhaustion looks like. For example, imagine you're a trend trader and you're long during a strong move up. If suddenly you see a blow-off candle or an exhaustion signal forming, that might be the moment where you decide to lock in profits instead of holding through a reversal. Now, the same thing applies to breakout traders. If you understand exhaustion, you'll know when a breakout move is getting stretched and when the probability of a pullback starts increasing. So this isn't just about finding reversals, it's about understanding when momentum is running out. And that's valuable information no matter what style of trader that you are. Now, if we switch over to the footprint chart, we can see another layer of information. Now, on my chart, yellow is selling and purple is buying. And you could see here the buying starts to stack. And at the bottom, the numbers shrink. And that's showing us there's less interest in selling at those lower prices. So the market tried to push lower, but participation simply wasn't there anymore. Now, the footprint charts aren't perfect, but it can really be a useful piece of confluence when you're identifying exhaustion. Now, once you start recognizing exhaustion signals like this, the market actually becomes a whole lot easier to read. But the difficult part for most traders isn't understanding the concept. It's learning how to spot these moments in real time while the chart is actually moving. So if you want help learning how to identify exhaustion levels like this on your own charts, I do offer one-on-one sessions where I break down your strategy, your execution, and the exact things I personally look for in the market. So if that's something you're interested in, you can just visit my website and book a call there. So another thing I pay very close attention to is the liquidity. Large players often push price through key levels to trigger stops and grab liquidity. So once that liquidity gets taken, the move can suddenly exhaust. That's when you start seeing those kinds of sharp reversals. So exhaustion is rarely random. It usually happens when you have emotional selling, liquidity being taken, and aggressive momentum that suddenly runs out. Now, the example we're looking at here is on the 5-minute chart, which is great for day trading. But the exact same concept applies for larger time frames. If you're a swing trader or investor, you should be watching the 4-hour chart, the daily chart, and even the weekly. Larger time frame candles create larger exhaustion signals, which can lead to much bigger moves. So the principles remain the same, only the time frame changes. And this concept really applies to long-term investing. Think about moments like the COVID crash or the recent tariff-driven market dip. Those are extremely emotional sell-offs. But if you understood exhaustion, those moments actually made sense as opportunities to add to your long-term positions. And I use this exact principle in my swing trading account to capture some of those moves. not by guessing, but by waiting for the market to show exhaustion first. And at the end of the day, exhaustion is simply the market telling you the move has run out of energy. And once you learn to recognize that signal, you stop guessing, you stop predicting, and you start reacting to what the market is actually showing you. And when you make that shift, trading starts to make a whole lot more sense. So thank you for watching, and I'll see you in the next one.